Adam Hewison here, co-founder of MarketClub with your midday market update for Thursday, Thursday the 21st of June. Well, what does the D word mean to you? Does it mean Jamie Dimone perhaps, or does it mean depression or deflation? I think it means right now in the market's deflation. We're seeing a very strong deflationary forces coming into the market, not just here in the U.S., but also around the world. We're going to be looking at some different markets today, and tremendous pressure on gold, down over $40 earlier on today. The oil market broke through the $80 mark today. Lots going on, so let's get started right away. But first, let me just say this. Is one-on-one personal Market Club coaching right for you? The only way to find out is give us a call. It's a free consultation and it's a free call, 877-219-1482. So we've got our folks are standing by waiting to hear from you, so I think you'll enjoy talking to them. I think also you'll get a lot out of these programs. It's really like turbocharging your trading. So let's go on to our first markets. Here's my home page, and there's my name, Adam Hewison. So this is what exactly I have the same setup as Market Club members. And you can see right now the Dow is down 150, NASDAQ down 47, and the S&P down 18. So a lot of pressure on the markets. Let's go to our portfolio manager. And here we are. The S&P is plus 60, which is a trading range. But if you remember, if you watched last night's Market Club TV, we showed you something very, very important. And I wonder if you remember what that is. Well, here it is. I'll show it to you again. And that is the Fibonacci retracement levels. You start here and you go right to the lows here. And what that gives you is the following. It gives you a retracement levels starting from 38 right here to 50 to 61.2%. If you can see the level, we just basically hit that in the last couple of days. We were very concerned that one, the market was overbought, like right here, and two, we were at the top of the Donchian trade channel and also at the Fibonacci resistance area. So what happens in Fibonacci, you have the move down like here, you have a retracement, and that goes into the, as I say, that goes into the 38 right here. That's 38.2, then to 50 right here, and then finally to 61.8%. Now that usually 61 or 62% is usually where the market stops. Not all the time, but sometimes, most of the time I should say. And so we've got the reversal today, strong down. We're actually down on the week right now, which is an important element. How we close tomorrow is going to be very, very key. We'll have to see if Europe follows through. I just see the Spanish banks want to borrow a gazillion dollars to stay afloat, which is not a good sign in my opinion. And I think we'll see more pressure on the banks and more pressure on the equity markets around the world. So let's see how that plays out. The other thing to look at very carefully is, let me clear the screen off just for a second and go to our, what I'll do is just put our trend line on here very simply and go from the lows here and the highs, and you can see pretty closely if we close at these levels below 1337 rather, I think this market's going to have a pullback of certainly to the 1310 level, maybe even to the 1300 level, and then we'll see how things go from there. So let's go on to our next market. The next market we're going to be looking at quickly, very quickly, at the NASDAQ. The NASDAQ is pretty much the same retracement, same performance, not looking well. And I think we'll see this market on the defensive. The Dow is looking much the same as everything else. So you can see we're down on the week and under a lot of pressure. We are in an oversold condition already, but I don't think that can last. As you can see, it can persist for quite some time, like right here, where it persisted for really since about the beginning of May until about May 17th, 18th. And I think that's the key there. So let's go to a market, the silver market, which is under a lot of pressure today. Remember, we talked about that in our comments. We said in our daily comments, we said the 29 area right here and the 28 area were the keys. Well, we broke through the 28 area yesterday, Wednesday, and you can see the repercussions of that. We're trading at 27.02, just around the 27 level. If we close down here, this is going to be a new low close for this entire move down. And let me just put that in perspective for you. if we just let me clear the screen and get some more depth to this chart. So we go back a year, and we're going back to 2012, right down to these levels here, when the lowest level we saw at that point in time was $26.14 for an ounce. And that sort of matches this level back here, and that was in September 26th of 2011 when we traded at 26.03. So the $26 level is certainly the next big level to look at, but it certainly doesn't look that great for silver at the moment. And if you remember, we have had our monthly trade triangle in place right here. Let me just take this off. The monthly trade triangle has been in since May 3rd at 29.98. So everyone you can see what we're doing with the triangles. You can't fake that. It's been in place, and you can see how they work out. But also, gold is not escaping this sort of deflationary pressures as investors are fleeing this. You can see we've moved below. Let me get a closer chart on that. You can see we moved below the parabolic today, and under pressure, 1571. I would not be surprised to see this market trade down. I think we'll have further liquidation. I think we're going to trade down to this big support area here, which is around 1540. I would not be surprised to see the market get down to those levels again. But remember, if you remember, we've always been saying our monthly trade triangles have never turned positive. They've always been negative, indicating a longer-term trend and bear market. So let's clear the screen, go to our next market. And the next market we're going to be looking at is, of course, going to be copper. If I'm right, yep, here's copper. And it's July copper. That's a big move down. Hit the parabolic today. You can see the parabolic has moved up here. And let me just show you. And I just use standard settings on the parabolic. Now, what you can do with the parabolic, now the parabolic is, let me just do this, show you first of all. It's right here on your studies, your on-chart studies. And what you can do is move this around. You see how we can make these levels fluctuate. If we want to, you can have a tighter thing there if you want to. But I always just use the reset, which is pretty the standard, which is the person who did the study, was the ideal combination. Now you can see today we hit the parabolic because it's now up here. And you can see this little dot. You can see the market just went through there today. And that indicated that the market is in fact moving lower, in conjunction with our monthly trade triangle, which kicked in right here, and that was back on early May, about May 13th. Actually, maybe a little. In fact, let's not guess. We can give you the exact price it came in at. So let's clear the screen and go here, and that was on May 14th. So just from May to almost just 1 month, and you've got some nice profits in this particular trade. So let's go to our next market, and that's going to be crude oil. Big story in crude oil is the fact we're looking at the July crude oil, but the near-term crude oil is basically trading below $80 a barrel. We're looking for the July to go to the $80 to $78 a barrel. But again, our monthly trade triangle, which kicked in right here on the 6th of May, has never wavered, and it's from 97.05. Our weekly from 97.90 has never wavered. We could put that in also, just very simply, boom. And that's really worked out really well. So I think we're going to see these markets go lower. So let's go to our next market. So bearish on crude oil, deflationary. Remember the D word, deflationary. And same way with people fleeing out of silver and gold because they thought that was a hedge against inflation. Well, it appears we're just going the opposite direction. Now, this is the big story today, the euro dollar, the euro against the dollar. And you can see we've had a big move down. We were outlining the 2750 area as resistance, which is right around here. For the last several days, the market's been unable to get through there. Of course, today's action pushed the market down. And you are, I would say, you're very close to hitting that parabolic. But again, you hit the top of the Donchian trade channel, which is right here. So I would not be surprised to see this market go down and test the lows of the Donchian trade channel. And I think we'll get back to these lows here. And those lows, just to give you the exact prices we're looking at, is this was, let's see, we traded down to as low as 23.05 305. So let's say the 123, rounded up to simple terms, 123, that was the low. And I expect the market to trade down to those levels. I don't think there's any enthusiasm to buy euros. We've moved officially into a trading range, 55, minus 55 right here. And we are looking for this weekly to turn around and go on the downside. You can see the market is clearly on the downside for the week. We'll be looking at the weeklies tomorrow, Friday. So let's go to our next market. And this is the Reuters Jeffries. This is what we use for our inflationary index. I'm going to scope this out. I'm just going to do a line chart, and I'm going to take the chart studies off. I'll leave the parabolics on, but I will take the Donchian off, and let's just scope this out for max. And you can see, in fact, let me just take the, I don't need the parabolic on, it just makes the chart look too confusing longer term. But you can see basically how our weeklies and our monthlies work. You see here's a monthly right here. And that's in, looks like September 19th, and that was 326. And exit at 396, a nice profit. The market comes down dramatically. If you're short, you would be short, obviously. You from 396 down to 229, and so on and so forth. And you can see here's another great buy, 278. This is and up to 335. These are all based on our trade triangle technology, and if you're not using it, as I say, the key thing here is to keep things simple. I mean, well, you know, here at MarketClub, our solution is pretty simple and effective. Here's how we do it. Here's our formula. We use the monthly trade triangles on stocks and this particular index. That's it. Look, the markets don't pay you any more for making it complicated. So I found in all my investment career, the simpler I can make things, the better off I am. So here's the last signal on April 4th, 305. We're currently trading at 268, so you can just scope that in a little closer. So there's the monthly right there at 305 on April 4th. We're currently trading at 68. Now, the lowest close we've seen in this market is 268.31, and we're currently trading at 268.50. So we could actually see a new low close in this particular index, which would be going down to our target that we're looking for in this market. And our target is 250. So our target zone, just to repeat, is 250 on the Reuters Jeffries CRB Index. That's what we're looking for. So let's see how that plays out. And let's clear the screen, and let's take a look at a couple of stocks now. And these are all showed up in our monthly recent trade triangles. So what I did, I searched for equity, volume greater than 1 million shares a day on average, monthly trade triangles just today. And this is what came up, JetBlue. We'll be looking at that. And of course, the fuel is helping JetBlue. It's unchanged for the day. The signal came in. If I mouse over here, you'll see it come in as a green monthly trade triangle at 539 that came in today, and it came in exactly at 10:44 Eastern Standard Time. So you know all of this information ahead of time, which is really cool. Now it's currently trading at 530, so there's a chance to buy it at a lower level than the trade triangle. We're also going to be looking at Sun Health, and you can see here this market's up, huge change in this, up 36%, and you can see the signal came in there at 739. The market's at 836 rather. Not sure you could have gotten that because the market did open pretty much on the highs, but nonetheless the momentum is on the upside. And the other one was ASML Holdings, and the trade triangle came in there at 51.76. Market's currently at 50.90. So here you can buy this one lower than the trade triangle. So the trade triangles come in every day. You get what we call little mining gems. You can go to the mine every day. We'll show you new trade triangles that are coming into the system, and either on the long or short side, depending on, so these stocks are so low, it's hardly worth selling them. So even though they had good volume, 4 million, 13 million, it's not worth it, but they do have red trade triangles. Now, if you go back 3 days and just very boom, you'll see a much, much bigger list. So these are things that just happened today. Then you can sort them if you just want to see the ones that are going up. Let's say you have a bullish bias on the upside, and if you have a bearish bias, well, these are the ones you'd be looking at. And there's lots of opportunities. There's one there, Archer Daniels Midland, 29.49. That came in at on the 19th at 30.14, so that's making money already today. So lots of opportunities with the trade triangles. It's like your own personal gold mine to go into and look for trades every day. But don't forget, really, seriously, give us a call. Personal one-on-one Market Club coaching. Is it right for you? The call is free and the consultation is free. So 877-219-1482. But stay tuned to these markets because they're very, very exciting right now, and there's an opportunity to make a lot of money. So stay tuned to this station, and I'll be back tomorrow with an update. Adam Hewison for Market Club. Have a great trading day.